This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil. I'm going to give you a stock market update. In fact, the last update for 2024. All right, let's go ahead and get into this. It's been pretty quiet. I do want to mention, if you have an interest in learning more about some of the techniques that I use with MACD and ADX and multiple time frames, I'd suggest starting with the book. You can go to rabilstockresearch.com/book for more information. Also, if you enjoy this content, please hit that like button and also subscribe. I am starting this a little bit early this week. It's a really quiet day, and I've got some obligations later, so I wanted to make sure I got this in. Let's just start with the market conditions, which starting with the sentiment, really there was no change this week because there was no update. They must be taking the week off, so I didn't get any changes in the sentiment number from Investors Intelligence. Still sitting in that higher risk territory around 43% as of 2 weeks ago. All right. Now, OBOS has rallied. The RSI 5 on the weekly has rallied up a little bit, but it's still inside this neutral range now, turning up from after getting down below the 50 level. All right. Now, the one significant change of the week, last week we had both volatility measures in the neutral camp, both weekly and daily, and now they're both negative. I'll go into that in just a second. Now, we still kind of sit in the same situation where the monthly and the weekly trends are positive. The daily is at neutral. We'll go into that in a second. And then on a momentum basis, the monthly is the only one that's truly a positive momentum right now. Weekly and daily, I have it neutral. All right. All right. Let's look at this volatility here. If you notice what's taken place over the last 5 or 6 trading days since the Fed came out and made that announcement and then dropped which was everyone was expecting, but then there was the comments that was made by Powell afterwards that caused a lot of volatility and a drop. Now, obviously, there wasn't a lot of follow through. We came down to this prior low, undercut that prior low a little bit, and now we're rallying back up. This is kind of what I was expecting. If you go back to my past Friday videos, going back for about 3 or 4 weeks, I said the possibility was there that we get some kind of a drop, and then we should get sort of a Santa Claus rally that should lead this to a close near the highs of the year. All right, and I think that's how this wants to play out. We might see a little bit more volatility, but I don't think, well, and it's possible it'll try and break out here, but I actually think it's more likely, maybe we stall as we get up towards this area. But I wanted to point out in the process of this volatility that's been created over the last 4 or 5 days, if you notice the moving average of the average true range, the average true range made a pop, and this is now turned to the upside. So that's what caused the volatility on the daily to turn negative. Now, the weekly has been rising, and it was starting to look like it was going to flatten out and maybe roll over. And now that's not happening, and we have some increase in volatility over the last few weeks. That's kept this back in this sort of negative camp. So right now we're looking at a situation where the volatility is a risk factor. It's a negative. The sentiment is still a risk factor. It's still on the negative side. Now, we might get an update next Wednesday that shows that the sentiment has shifted somewhat, but I don't think so. I don't think there's been enough of a move here to cause a big enough shift. All right. So that's kind of where we're situated there. Let's go ahead and look at the individual time frames. Now, if you notice what's happening on the monthly chart, we had, pretty good sized green bar. We got a little stretched away from the 4. And what I say, when we get far away from the 4, you should expect it to come back and test the 4. And that's exactly what's taken place here. We came back, we tested the 4, and now we've pushed all the way back up, and we're back near the highs. Now, again, it doesn't surprise me at all because of the yearly bar. Let's just take one quick look at the yearly bar. You can see that we opened up near the low, right? And we pretty much trended the whole year to the upside. And now I think we'll close pretty high. There won't be much of a wick on either end, right? A small wick here and a small wick here is the high probability. Now, just realize we're on a yearly chart. We're going to be pretty far away from the 4 as we flip over into the new year. That increases the likelihood that the first half of next year, we could get some kind of a retracement. While this 4 might be coming up, this could come back and retrace. and sort of meet up with that. All right. So that's what we're looking for, I think, most likely as we start next year. Now, I'm not going to go into it with the idea that we're going to turn down from day one. All right. Don't think of it that way. It's possible to happen that way, but don't guess that. All right. I think we want to focus on good, sound principles and do good analysis instead of forecasting. All right. And right now on a weekly chart, we came back down, found support at the 18-week, and we're getting a pretty good bounce off that level. Now, if you notice what took place in that drop and what subsequently is taking place right now is the MACD currently is still below its signal line this week. All right. Even though we're rallying back up. Now, by the end of the week, this might have come back enough that this will not be below. So we're going to want to evaluate that as we close Friday. But this one is the real troubling area, right? We've got a DI that has not been able to confirm through this entire period as we've gone to new highs, and the ADX has failed miserably below the 25 line. All right. Now, it's failing to confirm. What we're missing is price confirmation. We need a break of the 18-week to confirm the failure of the ADX to hit a new high. All right. So we don't want to jump the gun. This is almost like an early warning sign. So we want to be real careful about saying this is definitely going to go down. We don't know that. Green is still above red. We could make another move. We could see a really strong move here. This could go up and that could cause the ADX to confirm. I personally think it's gone too long to expect that. So I think we got to be careful if this does try and push to a new high. I still think there's a much higher probability that we go through some kind of a correction early next year, but we've just got to stay on our toes right now. Mainly with what's going on the daily chart, there's just been a lot of volatility. We had the drop down and the drop back up, but MACD is turning at the 0 line. And we need to see if red DI holds the 25 level and turns. So if we get a move down like this, and this makes a new move like that, then we've got a little bit more confirmation that the sellers are taking command right now. Right? If we keep rallying up, this is going to drop down, green's going to cross over, and we never had confirmation that red was really taking over control of the situation. All right. So we got to watch that. These are a couple of keys I think to watch over the next 2 to 3 trading days. Now, finally, one thing I wanted to mention, and I showed this on the other chart, was this. We did take out this low from here. All right. Now, if we go and look at what happened on the hourly chart, it doesn't look like an undercut and rally on the hourly. But if we go back far enough, you can actually see what's taken place here. Here is the lows from back in the, about the middle part of November. And if you notice, you can see what's taken place here. We did undercut this key level. All right. It's actually a little bit easier to see on the daily chart, but we did undercut this level. And if you notice the way this played out, we had undercut, we had a rally, we came back and tested. Now, instead of testing the low end of the range, it's tested the high end of the range. So let's just look at this. Let me draw this out for you so you can see. So this is the low end of the range that we broke. And then this is the upper end of this range, which we tested. All right. So I think this still qualifies as an undercut and rally signal, and we're moving back up. All right. Good thing to be on the lookout for when you have this kind of a loose range like that. That we're testing and breaking. A lot of times we're not going to get a full-blown test of the lower end of the range. We come back to the upper end of the range. So it's a good little thing to keep in mind. All right. Now we're working our way back up in here. It does look like there's some resistance. We'll just have to see how this plays out. Maybe they try and push it to another new high. And I think that's more likely as we move into the new year that we could do that. And then I think we need to be on the lookout for a reversal. All right. So that's the update for the week. I hope everyone has a happy and safe new year. All right. Take care.